Welcome back, everyone, to this day late in Uranium Week, where I'm going to go through today's video about different sources of information that some of you probably have seen around about where we are in the uranium market and how they often seem to not exactly be on the same page. So all of these sources of information come from people or places, I should say, where people should know what's going on. So they all these sources should be accurate. That being said, they're not all accurate. How I know this? Well, they're wildly inconsistent from one to another. Well, slightly inconsistent at least. And as I'm going through this, if your favorite company has some information that I make a joke about, just know that I'm just only joking or only pointing out the inconsistency. I don't hate the company. I own some of these companies that I'll joke about, but that's it. And know that some information may just be wrong because it's slightly out of date. I've always used the most recent source of information, but this is just meant to be a light video. Now, who's right in all of this information? Well, I'll take a wild stab here and say no one will exactly be proven correct. So just wanted to get that out there first. And also, if you have a problem with my sarcastic jokes, please forgive it because there will be a few in this video. Okay, so I wanted to start this off with a slide from Kazatompром's investor presentation where they use some UXC information about supply and the cost of the supply. Now, UXC has their official forecast of us being in the $20 range for a while. And while I disagree with that, that's just my opinion, you can look at what they see as the supply picture and the demand that they see fading over the next decade, which who knows, could happen easily. And they see a lot of supply in the 20s and 30s range of costs. And when you then include the 30s range and the fact that there's already a lot of sunk cost, and they seem to think that there's a lot of above ground inventory. And if there is, then well, $20 range seems to make some sense. Now, this is from Yellowcake PLC's presentation, straight from the year that does not exist, apparently. So this is one of the greatest x-axes on a chart that I've ever seen, but when you look at how the supply and demand picture is on the left, you see secondary supply kind of mixing in and basically crossing the reference case for demand at some point in the early 2020s. When exactly? Well, you can see my problem with that. But if you look at the chart on the right, I've kind of changed things a little bit because the chart on the left is current capacity. So we're not at current capacity. So I blocked off a little bit in the green on the right. And also it's possible that the secondary supply might decline a bit faster. So I just lightly put what could happen there. I mean, it could easily stay around for longer, but it's also possible that it doesn't. And also, I put in a little arrow at the bottom, even though it's not exactly because of the scale. The contracting kind of starts well in advance of the present. So we're not actually in 2019, we're in 2021-ish already. And the little dotted line under the supply that doesn't exist, sorry, again, it's kind of complicated, but it won't exist for that much time after we reach the incentive price. So if we stay down here with the incentive price at, I don't know, 45, 50, whatever, then that supply, if the price is in the 20s for another range, well, it will slide over a year. and that's it. And so if you look at this, and it's probably the clearest, even though most complicated picture of why I think it would be nice to last another year at low prices. Not only can you buy more uranium, equities or whatever, but also we reach a point where if the demand is in the reference case, it becomes closer and closer to a point where um, irrational or rational panic pricing might take over. Whereas now we could be there, but it's close. So the longer it lasts, the less close and more reasonable it is to expect a drastic price spike. Now, as to the coverage of demand and the uncovered demand going forward, this is from Yellowcake and Uranium Participation Corp, and they have their own sources. But I just want to point out that this is European and US utilities. Isn't it great that that's all the factors in the equation? It's not like, there's reactors in China or India or anything, but that's fine. That's fine, because this is all we need to know. While most sources agree that we're currently in a bit of a deficit, the length of that deficit and the depth of the deficit, I guess you could say, are very rarely agreed upon. Depending on the source, some think that going forward there's new supply going to come online or demand going to come offline. We'll see. That being said, we were in a surplus for many years due to secondary supply. Now, is the secondary supply going to come offline? What is the supply now? Well, good luck getting two different sources to agree on that. According to UEC, the 2019 demand is going to be 194 million pounds. And compare that with the primary production, which has been declining since 2016 and never surpassed 162 million pounds. Well, that looks like a wide gap between supply and demand, even if that is just primary supply. And yet you look at deep yellow information, and it looks slightly different. It looks like, according to them, the supply gap is coming, but we're currently oversupplied once you include secondary supply. Now, what the primary production includes, and if that includes if the mines that are currently offline were online, well, someone would have to ask. So, according to GoviEx, in 2018, the secondary supply was 48 million pounds of uranium. Well, that's a lot, especially if you look at, I don't know, most other forecasts. Now, I don't know what they're including. Maybe they're including the inventories in Yellowcake and UPC. That's possible. But it does seem to be approaching consensus that the secondary supply from the underfeeding will be declining. Now, the degree to which it will decline, again, there's no numbers on the chart on the right, but looks slightly different from the chart on the left. Unless my vision is going, which is possible. That being said, if you look at the Uranium Energy Corp chart on the right, it has a big appetite for new production. Now, if the mines that are offline coming back online constitute new production, well, then I would agree. Now I want to get into what is everyone looking at, because this is one of the things that bugs me the most. Because you look at this Bannerman presentation, and I really like that the work that the CEO has done, he's done his own, like they've done their own analysis and they have their own numbers. But then you just get to something like this, where they're talking about, where they try and show the deficit or disruptions that have come to the market and that are consuming the supply. And you just look at physical fund purchases. Well, are those physical funds burning the uranium, or are they just saving it for a later date? If they're saving it for a later date, why does it matter? It's still there. The supply is still there. Similarly, the Cameco purchases. Well, if Cameco was contracted out some supply from their mines, and then their mines are offline, so they're buying supply from someone else, well, they still have potential future supply from their mines. So again, why does it matter? It's like you're taking a ball out of a rack and putting it somewhere else on the rack, and it just pushes the other balls in place. Like it's the same thing. And on the right, the uranium energy presentation, where they have this source, I've seen it not only there, they seem to think, and I don't disagree, that a lot of the production that has come offline in recent years will come back. But not all. I agree. I don't think Rabbit Lake's coming back anytime soon, if at all. But they do assume that McArthur River will just jump back online in a few years, which without much of a ramp up, which is unlikely. I think there'll be a ramp up. I think they'll require some time, and I think they'll need. I think the first year back won't have all the production, and similarly with the 1 year back jumping all the production, all those Cameco or those Kazakh production cuts, are they just all going to disappear in 2021? I doubt it. But similarly, who knows if they'll follow through with the production cuts or if they're just exactly what they meant with the production cuts. Are they cutting their forecast or are they cutting their production? And on the subject of production cuts and future production cuts and supply depletion, this is just something I noticed. Few different sources have a few different numbers, and one example is in looking at Ranger, the Australian mine. According to GoviX, it comes offline in 2020, and that's 4 million pounds or 2% of the market. It's not nothing, it's not huge. But if you look at some other sources, they have it coming offline in 2021. So again, it's not huge, but that's just 4 million pounds of uranium, which is a decent sized mine, a year's production, that no one seems to agree on. And what about demand? If you look in the past, most people somewhat agree on what the demand is, which is should tell you all you need to know about the future demand. With the benefit of hindsight, we don't agree on exact numbers, so it shouldn't be any surprise that going forward, even just a few years, the difference between the base low demand, the consensus base case demand, and the high case demand is 20, 30, 50 million pounds, which is double the biggest potential mine in the world. Demand is uncertain. We don't know how many reactors are going to be built. We don't know how many reactors are going to close down exactly when. But the point is, the difference in these cases is huge. If the demand is on the high case, then it could already be not too late, but too late for a reasonable, no one stops buying and starts using stockpiles type event. But if it's low case demand, then there's still basically too much uranium. That's all I really wanted to cover today. Just wanted to show some of the sources of information that seem to be out there and seem to think they have an idea of exactly what's going on. I don't know exactly what's going on, and I doubt any of these do either, but I have a few ideas, and they have a few ideas, and that is what creates opportunities in the market. Someone's wrong. Now we just have to wait and find out who. So I hope you enjoyed today's video, and until next time, have a great day.